Welcome to episode 9 of the trading challenge between my two favorite boomers Bart and Eelco, in which they are competing for 2 tickets to a game of FC Barcelona. The asset for this week to trade is CRV. Are you guys ready?
Bring it on. Let's go.
Hi guys, today we're here in the Albert Heijn because I'm going to Barcelona and Bart is there.
So we are now at the tapas. We are getting some wonderful pieces of meat. We are gonna check out.
Okay Bart, we hope you enjoy your package. We are going to enjoy Barcelona. Bye!
Well done, Bart.
It's 18th of July. The balance is 278.25.
It's Friday the 18th of July and my balance is $308.84.
Here we are again, guys. Another week has been concluded. Very curious about the results once more. I know that CRV has been moving like crazy the past week, just like the entire market in general. Bart, how did it go?
It is a very painful week. I mean, this whole chart makes my eyes bleed and I'm banging with my head against the wall. But what happened. I cannot undo it. So let's just go through the pain and then give Eelco the floor and to let him laugh. Let's first start with the facts. I took a long and I gained on my balance like $4 something, which in an average week is not bad at all. In fact, if I keep performing like this, growing the account instead of just flatlining or slightly going down, I would be happy. But in this case, of course, I'm not, because afterwards just, took off to the moon. But I entered a trade. This is on 4 hour, so it looks rather dumb for me right now, but that's all hindsight. But let's go down to the lower time frame where I actually took the chart. So it was a little bit of a chaotic week. We are close to summer holidays here in the Netherlands, and everyone is planning events, social events. So I was on a family weekend. I had concluded it on a higher time frame. Obviously, it was an uptrend. So I was looking, marked out my levels. I think around here, this is where you gave us the assignment to trade curve. So I mapped out these levels where potentially there could be a retrace. Not very deep because the whole market is bullish. So on the weekend, actually, it went down in a sort of falling wedge pattern, I guess. Clearly accumulating, coming into this demand zone. Actually, I woke up in the middle of the night and I saw some EMAs over here and the price was pressing against these EMAs. And normally that's a sign, well, that is a sign to price wants to go through it. It's not a decisive sign, obviously. Considering the whole market, I took a starter position. Then a couple of hours later, I woke up and I saw that it broke structure over here, coming into some sort of low time frame resistance. I placed a limit order on the back test and that's almost got filled but did not actually get filled, so this was rather painful. But like I said, I was in a family weekend, so there were a lot of social stuff. I took this as a sort of one-off trade. I placed the TP at the top of the region with a 75% TP only, which I thought closed the entire position. So I was initially happy. So I think Eelco took the trade over here. That's even more painful because it could have let that leftover position ride, just witnessed my pain.
Yeah, but honestly, Bart, I feel like as a trader, you shouldn't really care too much about these kind of moves. Obviously, it's nice if you can catch them every now and then. And this is also one of the reasons why, and I'm actually making a video on this as we speak. When I'm positioned long on crypto, I always use partials. And when I'm positioned short on crypto, 9 out of 10 of the occasions, I take full profits once the position hits its first target. So that is one way to prevent this from happening, knowing that the crypto market and, for example, also NQ are markets that are made to go up, in which if you're positioned long, try to always take partials. But at the end of the day, even if you took partials, you wouldn't have let the remainder of the position run until this level. Because what are the odds that you actually get these kind of moves, Maybe in this occasion, it would have been in your favor, but 9 out of the 10 occasions, your remainder of the position would have been stopped out at some point. You know what I mean?
And obviously never expected this kind of pump. I mean, I have a severe trauma from not taking profits from my entire trading career. That starters. After that, these kind of sort of Bitcoin dominance dropping kind of bull run type of environments are completely new to me. So I never expected in my whole life pump like this. But yeah, it could happen.
But at the end of the day, it was a good trade, a profitable one. And you played the range and you took profit at where I think you should have taken profit as well. In this case, you took full profit. That's something that I probably wouldn't have done. I would have taken partial profits, especially also considering the market environments. But just like I said, in general, when I'm long on crypto, I take partial profits. But the setup was good. It was a high probability setup. according to your system, it hit a profit, you made profit, the account is still growing, and I think that is something that you should be focusing on.
Yeah, I'm getting more confident and that, you know, I will become profitable.
Perfect. Eelco, would you like to share with us what trade you took,
Sure.
how it played out, and how much profit you made?
Sure. First, took a look at the high time frame, and as you can see, there was a nice distribution model taking place with the demand zone over here, and it tapped in right there for 3-4 times. From there, I draw the low time frames because it already took off without us due to time. So it started here, and so this is the low time frame I was looking at. And it already took a retest in the new demand zone. So I was confident enough to take the trade over here, especially looking at the chart and the money that was going in. But this was, from here on, it took on flight I could not imagine. So this first green line you can see, that was initially it was my full TP, but I just adjusted that one. So that was a partial TP. Took a look at the higher time frame again. Took a full TP, new full TP at this level.
Okay, and that's the
For
range
now,
high
it's,
area, that makes sense.
It's looking nice.
Definitely. There's definitely something that I was seeing that was quite interesting. I'm quickly going to share my screen as well with you guys. Before I continue, Eelco, how much money did you make on this trade?
My partial TP delivered me $30. That was 75% of the trade. The other 25% is still running and is now in a profit of an additional $16.
Awesome. So a great trade. But there's still something that could have been improved, and I think it's quite valuable for the both of you guys. So I agree, this was quite interesting, right? That was taking place over here. Price gets a push up, and over here breaks structure towards the upside. This is something that we have also been discussing in the Tribe community the other week, and multiple members were actually long on CRV. But once you see this shift in momentum, once you see that bulls are taking back control, that's indeed the moment to start looking for longs. Now, Eelco started looking for longs right over here. And I could see that you have marked out this break of structure. This break of structure, and that is what I want you to explain to me. This is the break of structure that gave you the trigger to start looking for longs. But your invalidation of your trade was all the way over here at this low. But if this break of structure is the trigger for your trade, and I think it actually was a high probability break of structure, and I'll quickly explain to you guys why. Because we know that if we want to look at even a valid break of structure, we need to break through a high that brings us to a lower low compared to the low that brought us to that high. Well, this high brought us to a lower low over here compared to this low that brought us to that high. So therefore it was a valid high, a significant high to break and a valid break of structure. With valid break of structures, we have 3 different degrees. We have valid break of structures, which we do not really want to trade, and we have significant break of structures, and we have high probability break of structures. You're looking at a high probability break of structure if both lows mitigate an important liquidity pool. So let's say you have this slow grind up, and then price dumps and trades back above that high. You're looking at a significant break of structure. That is what we were looking at right over here, because this low is the only low that mitigates the liquidity pool beneath these 2 lows over here. If you want to look at a high probability break of structure, then you will be looking at, for example, something like this. Because then this low mitigates this liquidity pool, and this low mitigates it for the second time. Okay?
Right.
Now in this case, we were looking at a significant break of structure. But a significant break of structure, if the trend is really strong, if your bias is really strongly in favor for the bulls, is enough to start looking for longs. So this was a valid trigger to start looking for longs. But then in that case, if this is your trigger, because we always need a high probability or significant break of structure to give us a trigger, and thus also to give us an invalidation, your invalidation should have been beneath this low over here, because this is the low that started this impulse. And then you can play the retest. So basically what we were looking at over here is what I call a continuation structure, right? You guys are probably familiar with this. Price trades back above that high, gives a retest. This is where you execute over here with your invalidation beneath that low that started that impulse, and then you target higher levels. It was a good trade. You marked out the valid trigger on the chart as well, but you could have done even so much better, because if you would have used this low as your invalidation, just look at the difference in RR. It's ridiculous. Never look at RR, and don't let RR influence your decision making on the market, right? This is not about the RR. This is just about the difference between the actual invalidation for your bullish thesis and just using too wide of an invalidation over here. You see?
Yeah.
The difference between 2.12R to the current high, of course, and almost 13R towards the current high. And this was a high probability trade. Like, take 10 trades like this based on this trigger within a strongly uptrending market. I think it's going to succeed with this significant breakout structure 7 out of 10 times. Target an RR of like 2, take partial profits there, and then let the remainder of the position run. And that is what I think. For example, this is actually very similar price action, right? What you can see, price slow grinds up, flushes down, trades back above that high, retests that high, and takes off. You see, Bart? So you could have also taken that trade. It's once again very similar structure. And once markets start trending, what you often see is that everyone is waiting for a pullback like this to then position themselves long. But if markets are truly bullish and they are trending, they only give shallow pullbacks like this. And this is where you want to position yourself, because they're not going to give pullbacks like this anymore. Because why would they if market is truly bullish? Why would they give the opportunity to everyone to then once again get in on that move? Same when the market is truly bearish, it doesn't give pullbacks like this and then continue down lower. If market is truly bearish, it slow grinds down, sweeps the highs, trades back below, and then you can short it towards lower levels. And that is what I think is very important, especially also to realize in the current market circumstances, which the both of you are trying to navigate for the very first time. This is super important to recognize. So right now, looking at the current structure for CRV once more, what we can see, price over here, slow grinding up. If it gives a flush and trades back above that high, you can take that setup once more. Is it going to succeed? Not a 100% certainty. But take 10 setups like this once again, keep milking this trend towards the upside, keep adding margin to your position once price finds a new invalidation, and over time, you're gonna make a bunch of profit until the trend shifts or when your bias changes. When can our bias change? If, for example, CRV meets the top of that range that Eelco was marking out. So we can see over here, we have a bunch of highs on the higher time frame. Now let's say CRV starts mitigating those highs, might be a time to slowly become a little bit more cautious and start taking some more profits on your long positions.
I love the explanation.
That's another episode wrapped up of the trading war between my two favorite boomers, Bart and Eelco, who once more, the both of them, took a profitable trade, which is still crazy to me. The accounts are growing, the accounts are thriving, the market is thriving, and so are we. I want to thank you guys for watching. If you guys can think of any questions after watching today's video, feel free to let us know in the comments down below. Make sure to like the video, subscribe to the channel, and we'll catch you guys on the next one. Ciao, ciao!